Imagine a pharmaceutical giant that not only meets but exceeds expectations, all while navigating the turbulent waters of regulatory changes and market uncertainties. That's exactly what Eli Lilly has done, setting a new bar for performance in the healthcare sector. But here's where it gets controversial. The company's outlook for 2025 has been revised upwards, and its latest earnings report has sent mixed signals to investors. On Thursday, Eli Lilly announced a significant boost to its 2025 sales forecast, raising it from $58 billion to $61 billion to a new range of $60 billion to $62 billion. This upward revision reflects the company's robust performance across its product lines, particularly in its diabetes and weight loss medications. Simultaneously, Eli Lilly expects its adjusted earnings for 2025 to be between $21.75 and $23 per share, an increase from the previous guidance of $20.78 to $22.28 per share. The company's guidance takes into account the existing tariffs imposed by President Donald Trump as of August 7, 2020. But notably, it does not factor in the proposed additional tariffs on pharmaceutical imports into the U.S. This omission could be a point of contention, as the potential impact of these tariffs on Eli Lilly's operations and profitability remains uncertain. In another development, Eli Lilly released the eagerly awaited results of its late-stage trial for its experimental obesity pill, orforglipron. The highest dose of the drug helped patients lose more than 12% of their body weight, though this result fell short of Wall Street's expectations. As a result, Eli Lilly's stock price dipped as much as 12% in pre-market trading. CEO David Ricks addressed this in an interview with CNBC's Squawk Box, stating, "I feel good about the value of the company. Investors have to decide what they think." He went on to emphasize that despite the stock market's reaction, Eli Lilly is on a strong growth trajectory, with robust performance in the second quarter and a promising pipeline of new products. One of Eli Lilly's star performers in the second quarter was Mounjaro, a diabetes treatment that generated nearly $5.2 billion in revenue, a 68% increase from the same period last year. Zepbound, the company's weight loss drug, also outperformed expectations, raking in $3.38 billion in sales, a staggering 172% increase from the previous year. Analysts had forecasted sales of $4.49 billion for Mounjaro and $3.06 billion for Zepbound, according to street account estimates. CEO David Ricks expressed optimism about the future, predicting that tirzepatide, the active ingredient in both Mounjaro and Zepbound, could become the best-selling drug in the industry within its third year on the market. He also highlighted the company's pipeline, indicating that more innovative products are on the horizon. Here's a closer look at Eli Lilly's second quarter performance compared to Wall Street's expectations. Earnings per share, $6.31 adjusted versus $5.57 expected. Revenue, $15.56 billion versus $14.71 billion expected. The company reported second quarter revenue of $15.56 billion, a 38% increase from the same period last year. U.S. sales surged by 38% to $10.81 billion. Driven by a 46% increase in the volume of prescriptions and units sold, primarily for Mounjaro and Zepbound. This growth was partially offset by lower drug prices. Eli Lilly's net income for the second quarter was $5.66 billion, or $6.29 per share, compared to $2.97 billion, or $3.28 per share, in the same period last year. Excluding one-time adjustments, the company's earnings per share were $6.31. These results come at a time when Eli Lilly and other pharmaceutical companies are facing increasing pressure from regulatory bodies and political leaders. President Trump has threatened to impose tariffs on pharmaceutical imports and has called on drug makers to lower prices in the U.S. In May, he signed an executive order reviving the most favored nation policy, which aims to reduce drug costs by tying U.S. prices to lower international prices. Last week, Trump sent letters to Eli Lilly and other companies, urging them to take steps to lower drug prices by September 29th. This move highlights the ongoing tension between pharmaceutical companies and the government, as both parties seek to balance profitability with accessibility to essential medications. As Eli Lilly continues to navigate these challenges, its performance in the second quarter serves as a testament to the company's resilience and innovation. But this is the part most people miss. The potential impact of proposed tariffs and price controls on the company's future growth and profitability remains a significant concern. What do you think? Should pharmaceutical companies be required to lower prices, or should they be allowed to maintain their current pricing strategies? Share your thoughts in the comments below.